Hi everyone. Welcome to StockSageAI. Today in this video, we are going to talk about technical analysis in detail. I'll walk you through on how to perform a comprehensive technical analysis on any stock. So in this case, we have chosen Reliance for an example. Normally, a lot of professional analysts do this most of the time at major investment firms. So let's understand what is the overall approach on doing a deep technical analysis. So, what is technical analysis? It's a study of historical price movement and trading volumes to forecast the future price movement of a stock. Unlike the fundamental analysis, which looks at a company's financials and business models, technical analysis focuses purely on the stock's price action and related indicators. So let's deep dive into the details and understand this better. First of all, let's talk about the price charts and time frames. What is a price chart? It's basically the stock price over a period of time. So, for example, in this case, you can see we have a stock price of Reliance from September 2024 to April 2025. So, the time frame selection is pretty crucial. Shorter time frames like daily charts are suitable for short-term trading decisions, while the weekly or monthly charts can help identify long-term trends. For short-term analysis, you can look at the candlestick chart and do the pattern analysis and other things. But from a long-term perspective, let's understand how things work out on the basis. If you see largely on this chart, we have the price shown by the blue line, right? If you see, there is a downtrend from here, a price of 1500 till 1200. Then it was moving sideways, and now it went to 1165, and then there was an uptrend from there to almost 1400. Okay, so this showcases a downtrend, a bearish phase, and then it shows sideways movement, and then it shows an uptrend. And this is what we need to really identify, how the price is movement. It doesn't move in a straight line. It creates patterns of ups and downs. And these patterns form the basis of the technical analysis. So always start by identifying the overall trend. Is the stock in an uptrend or it's in a downtrend or moving sideways? Second point is the moving averages, which we normally call SMA, SMA 20, SMA 50. They kind of depict the simple moving average for 20 days and simple moving average for 50 days. SMA 20 is showcased by the orange line, and the SMA 50 is showcased by the green line over here. So, whenever a short term moving average crosses a long term moving average, it's considered a bullish signal or a golden crossover. And conversely, when a short term MA crosses and moves below a long term MA, then that's going to be a bearish signal, okay, or a death cross. So we can see in this period that there is a crossover over here when orange crosses the green line, and there's an uptrend, so it's a bullish signal. And if I look at this place, is going below the green line, a 50-day moving average, and it's going to be a bearish signal over here. So the 20-day SMA being above the 50-day SMA indicates the bullish movement continuation over here, suggesting strength in the current uptrend. But we just don't measure on the basis of this only. So we have to look at other aspects. There's another aspect or another indicator which we have to measure is the Bollinger Bands, which is primarily used for measuring the volatility of the stocks. So there are going to be two bands, Bollinger upper and Bollinger lower, which represent the upper and the lower range of the price of the stock. Now, these bands expand and contract based on the market volatility. The price will always tend to bounce between these bands. And when the price touches the upper band or exceeds the upper band, the stock might be overbought. And if it touches the lower band, the price might be oversold. So we have to always remember this. Okay. Um, Now, use the Bollinger Bands to identify potential reversal points and gauge abnormal price movements. When price is touching the upper band during an uptrend, it often indicates strength rather than overbought condition, and vice versa. We also have to look at another indicator, which is called RSI. In correlation to this, so RSI is basically your relative strength index. It's a momentum oscillator that measures the speed and change of price movement on a scale from 0 to 100. You're going to see two lines over here. One is at a level of 30 and the other is at the level of 70. Um, Typically, RSI above 70 is considered overbought, and it's a potential sell signal so that you can take money out of that stock. RSI below 30 is going to be oversold signal, primarily a buy signal, so that if you really want to get into that stock, it's a buying opportunity for you. But you have to look at the larger scheme of things. Where is the overall price trend and other aspects as well? We can't just go by looking at the RSI. So the center line is going to be 50, and anything crossing above or below this is going to showcase the shift in momentum. Okay. So don't use RSI ever in isolation. Combine it with the trend analysis. RSI overbought signals are less reliable in strong uptrends, just as oversold signals are less reliable in these strong downtrends. Okay. So remember this. So I'll give you this example. If you see, this is already touching it's actually below 30. It's an oversold range. But if you see the price was still falling even after that. So this doesn't give you a guarantee that the price will bounce back from here when the RSI was 17, right? So you have to look at the larger scheme of things and understand this. Then comes the another indicator called MACD, which is your moving average convergence divergence. And this is a trend following momentum indicator. This consists of two lines. One is going to be a MACD, the other is the signal line, the blue MACD and orange signal line. This histogram represents the difference between these two lines, and we have to look for crossovers on this chart to understand the momentum, that where the momentum of the stock is. In this example, MACD above the signal line is going to be a positive momentum. So whenever MACD goes above the signal line, it's a positive, and when it goes below, it's going to be a negative. Okay, so we have to consider both of them. So next is the volume analysis, which we have to do in along with these different indicators. So volume analysis will be confirming our price movements. This will be shown with the green and red bars. What green and red bars represent here is the number of shares traded during a given period. The green bar indicates the period where the closing price was higher than the opening price, while the red bar indicates the opposite, that the closing price was lower than the opening price. Okay. In our detailed analysis, there is going to be a value called OBV mentioned over here, which is going to showcase the volume trend. Whenever this indicator is there, you can see whether there is a strong volume confirmation or not. OBV stands for on balance volume, a cumulative indicator that adds volume on up days and subtracts its down days, okay, to come up with the overall market summary for this stock, overall the trend where it is going and all, right? So strong price movement should always be accompanied by strong volume for confirmation. Let me give you an example. If I see, since this MACD is falling below the signal line and I see a lot of selling points over here, the overall market price is going to crash for that stock. But if I see this point where it is increasing, if there are no green lines here or green bars here, it means the support is not there. But since we see here the volume is there to support the uptrend, that means that the stock is in the bullish phase. So from a larger perspective, when we look at all these indicators together, um, let's look at the key things, right? The key signals. Do we have a potential bullish momentum? If there is a bullish momentum, it will indicate positive momentum in the stock price movement. If the bullish trend is there, the 20-day SMA is going to be above 50-day SMA. This confirms an ongoing uptrend in the stock. The 20-day exponential average is rising. This shows recent price strength. High volatility is detected. This suggests larger price swings are expected, which could prevent both opportunity and risk. And you can also look at the current ATR. The current ATR is the average true range measuring the volatility. This really helps determine the potential stop loss level in the position sizing. Okay. So combine these multiple signals for confirmation. No signal indicator is perfect on its own. You need a correlation. When several of these indicators align, the probability of a successful trade increases significantly. Okay. One more thing which I wanted to highlight is so to perform a complete technical analysis and get into a trade. Remember these 4 points, like I just mentioned. Identify the overall trend, access the momentum, like where it is using RSI and MACD, evaluate the volatility, confirm the volume, and look for convergence and divergence between the indicators. But you also have to figure out when you enter or exit this stock, right? Which is the entry and exit points. Based on all these indicators, you can establish the entry points. How? For an entry point, when price crosses above a key moving average. Second point is going to be when RSI moves from oversold to the neutral territory. When MACD crosses above its signal line. When the price bounces off support with increasing volume. So these will all give you together a entry point for that stock. Now, similarly, vice versa. For exit point, when a price crosses below a key moving average, when RSI enters overbought territory, when MACD crosses below its signal line, and when price approaches resistance with decreasing volume. Okay. So in this, if we use all of this information, we can identify our support and resistance levels. We can identify our stop loss range. We can all get this data from the deep analysis of these indicators. Okay. One more point I have, which I want to discuss, was that how do we apply technical analysis to different market conditions? For example, the market could be in a bull run, it could be in a bear phase, or it could be moving sideways. Okay. When it is in bull run, it's a bull market. Focus more on the momentum indicators. Look for pullbacks to moving averages as potential entry points. You have to be cautious of the overbought signals as they may persist longer. Okay. You might feel that this is going to be in an overbought phase, but it might not be there, right? Or it might be in oversold. You might think that the stock will bounce from here. It might not. Like over here, if you see the price still goes down. Similarly, in the bear market, pay closer attention to the resistance levels. Consider the holding periods. Be skeptical of oversold bounces unless accompanied by a strong volume. You need to get those green bars. And if it is a sideways market, focus on trading the range between support and resistance. Okay. Look into the range. Pay attention to the Bollinger Band contraction. This band range would be very small, which often precedes the breakouts. So adapt your analysis to whatever market condition is there. The same indicators will provide different insights depending on where we are, bull, bear, or a sideways market. So, in a nutshell, if we have to conclude, no indicator is perfect, right? We need multiple indicators to get the confirmations. Um, Risk management is very crucial. Never risk more than you afford to lose. Keep on practicing on these data points before actually committing to a real capital. Try it out. Take the help of our platform. It provides you a market summary. It will give you complete trend analysis with the help of AI. It makes your job easier to understand what these insights are and what should we really do. This will be helping you if you use this platform. You'll be well on your way to making smarter data driven investment decisions rather than going through a gut, or maybe somebody gave a tip or something like that, right? Never do that. That's a recipe for disaster. So yeah, that's pretty much. Thank you for joining these technical analysis class. In our next session, probably I'll deep dive into advanced chart patterns and how to integrate the technical analysis with the fundamental research for a complete investment approach. Thank you.